Hey, all, welcome back to ShareTreck. We got another fundamental analysis, and this is a very interesting and on-topic company. In fact, it's the biggest company in the world right now. We're talking today about Microsoft. Now, AI has been big. We've had a lot of hits, things like NVIDIA, things like Microsoft, Meta, Amazon, but some misses. Recently, just this past week, we had UiPath and Salesforce report. And when we're talking about the topic of AI, Salesforce and UiPath really shone a different light what we saw last week. So just taking a quick look at the Salesforce and UiPath um, revenue and their sales and their quarterly report, software revenues are not growing like we thought they were for companies like Salesforce and UiPath. Um, According to Salesforce, according to their quick summary of their annual report, they say that chatbots and AI are bringing a lot of attention and a lot of competition. And with lots of competition, the software pricing and software margins and software revenue is actually starting to collapse, which is really surprising. What I'm seeing in companies like Path and Salesforce, ticker symbol CRM, software revenues falling, which is alarming. Salesforce is also guiding much lower, and they're guiding less growth than expected. Instead of guiding the expected 12% growth, Salesforce is doing 10%. And listening in, I read through a summary, I read through what were the main points. Salesforce says that they're growing much slower with AI. Instead of faster, they're growing slower. CRM is getting beaten by chatbots. And when I think of chatbots, I think of companies like OpenAI, ChatGPT, which Microsoft actually owns 49% of. And CRM, Salesforce states they saw a big decline in demand for their services because of a lot of software competition. Now, I'm going to touch on a little bit of the difference between software companies and the designers. NVIDIA, it just designed chips. It doesn't care where the chips are going to go, whether it just goes to a few big companies like Amazon, Meta, Microsoft, Apple, or hundreds of companies, whether it goes to some of these smaller companies. NVIDIA just like making those chips and selling those chips. However, software companies, when we see things like revenues falling and their stocks cratering into the abyss and going into the ether, that really gets me questioning about how big the software side of this AI boom is. So today, we're going to take a look at the biggest AI company, the biggest software company, and actually the biggest company in general, which is Microsoft. Microsoft is actually the biggest company in the world by market cap. And what I've done is I put together some of what I see is the main points of what I picked up. And I heard your suggestions. A lot of people wanted more summarization and less going through the earnings, going through all the nitty gritty. So, first of all, why is this company so large? It's beaten both the S&P 500 and the Nasdaq as of recently, as you see over here on the chart. Their 5 year, it's beaten them almost every single year. But how is the company doing? First of all, I went ahead and I looked at both their annual report and their quarterly report. I got a lot more information on their annual report, which I just gave a quick summary of right over here. So in their annual report of their income, of their revenue, they get about 31% of this from business and productivity. Those are their words. Those include things like what Microsoft Office, Microsoft Dynamics, which is their customer relationships management program, Copilot, 365, LinkedIn, and their biggest revenue gainer was actually Azure, Microsoft Azure, which these cloud services make up over 40% of their income. And the final, about a third, comes from their personal computing, things like Windows, Bing, and also Xbox. So the summary I got from their annual statement is 52% revenue comes straight from the US and $62 billion of total revenue, which is insane. This is just a monster company, which gets me thinking even further how they're able to get 35% net margin. And just to compare it, Microsoft being the largest company in the world, its market cap is about 20% greater than Apple. One thing I see from looking at the Apple's earnings call and Microsoft earnings calls is services are very, very high margin. Microsoft gets most of their revenue through services, whereas Apple gets most of their revenue through products. And we could take a look at Apple at a different time, but the difference in margins is huge. Microsoft also saw growth in Azure, and they are currently the leader in AI. Aside from NVIDIA, which is a different type of AI, I'm talking more so on the software side. So this I found really, really interesting, where in their annual report, in their recent report, the only area that actually saw a decline were devices. So every other area, big increase even in LinkedIn, in Microsoft Cloud, in Windows OEM, increases all across the board. This company is doing incredibly well. And a summary of their current statement, the 3-month statement, net income, it's going up about almost 20% increase in net income, whereas their costs only increased by 15%. Their R&D about 10%, their sales, marketing, general administrative also about 10%. Their revenue is increasing greater than their costs, which is a really good thing. And they have so much free cash, and I'll get into later why this is a great positive for the company. They did list a few risks. One of the big risks I found was government. And if government regulation comes into play, that could really change the way Microsoft goes. If and a long time ago we talked about NVIDIA, where government stepping in might change the way NVIDIA might have some sort of monopoly. Right now, I see a situation where a few mega companies getting as Kathy Wood would say, lion's share of a lot of the revenue. If Microsoft eventually were to get so big, government and competition commissions might come in. In fact, this quarter alone, the past 3 months, they paid $655 million in legal costs just this quarter. So growth in everything. Growth in all areas except for devices, growth even in gaming, like in Microsoft. So what else did I find? I'm gonna be honest with all you viewers. I really don't like listening to the Microsoft earnings call. Personally, I find it a little bit boring because it just keeps winning. All they do is talk about how great and how their consistent revenue goes on. They got nice consistent revenue, consistent growth. They just keep doing better. So I rather prefer just reading it really, really quickly and going through the key parts. Microsoft, um, everybody sees them as a company which is always doing well. In fact, I remember a short while ago, I was in kind of like a chat of a bunch of people who were interested in markets, much like we are. And the host, FX Evolution Tom, actually asked, what is the one company if you could buy one of and buy forever? A lot of people said Microsoft because it's got a massive moat and it's got that consistent service revenue. Now, what else did I figure out from this great, crazy earnings call? Now, I mentioned that it has no issue with cash flow. In fact, if you take a look at its cash right now, about 80 billion, that is enough to cover all his short-term debt and most of his long-term debt. its bonds being issued right now is significantly lower than the bonds that they have right now are actually yielding. So that is quite good for Microsoft shareholders. But this brings into a very poignant point that I've discovered not only in Microsoft, but in other companies like NVIDIA, other companies like Meta, companies like Amazon. And that is that cash-rich companies do very well in high interest rates. This I picked up from their annual statement. As you see over here, they got about close to $3 billion in interest, in just interest income, whereas their interest expense, it was 2/3 of that, meaning they're making much more in lending out money, much more in being the lender and buying these treasuries than they are in actually lending. So that gets me to this point that in high interest rate environments, big companies, cash rich companies, companies like Meta, Microsoft, Amazon, Apple, NVIDIA, they'll continue to do well because they'll just pick up these very juicy, greater than 5% yielding treasuries and use their cash to earn them even greater cash. A couple weeks ago, we talked about the company CRISPR, and it's one of the few companies that has a very great cash position. And they're using that cash to buy treasuries, and that's benefiting the company, increasing its revenue. Microsoft is another one of these companies. And that really got me thinking that Microsoft is almost like a company that would do well no matter what the situation is. If we were to have high interest rates, it's got the cash, it's going to buy treasuries. If we were to have lower interest rates, it'll be able to issue out these bonds at low interest rates and get even more cash. It just continues to win, continues to do well. And that made me think, hey, Microsoft, what is it like right now? What about its current valuation? So I've got our very nice stock valuation chart right here. Right now, Microsoft trades at about $415 a share. And I went ahead and I projected its forward diluted EPS. If it were to dilute all shares, there's not very much of a difference. You'd see a forward current PE about 35, which for a software company, that's actually quite low. That's not too bad. Wall Street's estimate for their EPS growth rate is about 17, which puts them close to a little over a 2 peg PEG, price to earnings growth. But for reasons that I'm going to explain right now, I'm rating them taking a much more conservative estimate and thinking that they might be closer to a 15% earnings per share growth, which puts them at about a 2.35 PEG ratio, which is trading cheaper than companies like NVIDIA, trading cheaper or close to companies like SMCI, but I think Microsoft has a greater margins than SMCI. So why I took the 15% earnings estimate growth instead of the 17% was in case the AI demand were to slow across the board. CRM, Salesforce, UiPath saw a decline in services revenue. Microsoft, however, sees no decline at all, which what if that decline were to come a little bit later, where some of the smaller companies face, and CRM isn't a small company, but some of the small to mid-size or smaller than Microsoft companies were to get hit first, and eventually it goes up to the big players. That's why I took a much more conservative estimate. Another thing is, another interesting point, Microsoft just in the last 3 months added about $88 billion to their market cap, which is 3.1 trillion. That means just in the last quarter, Microsoft added about a 30% growth to its market cap, which is it's just an interesting point. Something to talk about at your next little family gathering. Full disclosure to everybody, I do own some Microsoft in my long term, and I would, to be honest, happily buy more Microsoft if I don't find any better deals. I think it's just a company that everyone should have a little bit of exposure to. It's a revenue monster, a kaiju in the revenue industry where it always does well, and 35% margins is just mind-blowing. So I want to touch on, why do software companies trade so expensively? Why do we get PEG ratios greater than 2% and um, PE ratios greater than 30? Software pricing holds up actually really well, and generally it increases over time. Although Salesforce and UiPath might bring a little bit of an early warning. We'll have to see in the next earnings. I hope it's not an omen, but we'll find out. Software margins hold really well and remain strong time over time over the years, and they actually become greater as efficiency grows and these companies are able to cut costs and become better, and their profitability is incredibly high. Often with software, we see companies that kind of last forever. When someone starts to use Microsoft, when someone starts to use the Mac OS, you don't really see a lot of switching. And moreover, you don't need to sell new products when you have software revenue. If you were to think a company like Pepsi or Coca-Cola, people need to go every week to the grocery store and buy these, and companies need to ship and distribute these. Whereas software, you kind of sign up and these companies just keep milking the revenue through monthly fees over and over again. I think a lot of folks and investors kind of fall into the trap of comparing software companies that trade kind of rich to other industries like staples, like Pepsi, or some of the banking stocks, which have different growth rates and different margins and different revenues. So my thoughts are that Microsoft is a great company. It is a company that we can probably own forever. However, if we were to see a thing like what happened to Salesforce, what happened to UiPath, happen to Microsoft in the next earnings, and we see a softening of demand in software, softening of demand in some of these AI things, maybe that might bring up a buying opportunity. But I'm pretty bullish on Microsoft. I think it's a forever company. It's still seeing growth, still seeing margins, but what do you all think? And do you like this little new format? Let me know what your thoughts are. And do you own Microsoft? Do you own a little bit of the largest company in the world, which pays a dividend, by the way? And did you learn something about why some of these software companies, software as a service companies, trade a little rich? Thank you all for giving me time. Thank you all for inviting me into your homes or your phones or wherever you might be. And we're going to be back next week, probably with another very interesting company, which might have a cash problem in Tesla. Thank you all, and have yourself a good day, friendos. Bye.